the challenges and opportunities for secondary market transactions in Asia, such as currency depreciation, regulations, and a tough exit market. The secondary market, where buying and selling of equities and assets takes place before a private equity fund's agreed term is up or the company floats on an exchange, is a fast-growing and dynamic segment of the private equity industry. In Asia, the secondary market has evolved differently from the more developed markets in the US and Europe, and presents a unique set of challenges and opportunities for both sellers and buyers of private equity stakes. One of the main challenges for secondary transactions in Asia is currency depreciation. Many Asian currencies have weakened against the US dollar in recent years, due to various factors such as trade tensions, capital outflows, and COVID-19. This has eroded the value of Asian private equity portfolios denominated in local currencies and created a mismatch between sellers' expectations and buyers' offers. To overcome this challenge, secondary players need to adopt flexible pricing mechanisms that can account for currency fluctuations and hedge against exchange rate risks. Another challenge for secondary deals in Asia is the complex and diverse regulatory environment. Each market in Asia has its own rules and restrictions on foreign ownership, capital controls, taxation, and disclosure requirements. These can pose significant hurdles for cross-border transactions, especially for buyers who are unfamiliar with the local regulations or lack the necessary licenses or approvals. To navigate this challenge, secondary players need to conduct thorough due diligence, engage with local advisors and regulators, and structure deals that can comply with the relevant laws and regulations. A third challenge for secondary transactions in Asia is the tough exit market. Many Asian private equity funds have struggled to find suitable exit options for their portfolio companies, due to factors such as weak IPO markets, low valuations, limited strategic buyers, and geopolitical uncertainties. This has resulted in longer holding periods, lower returns, and higher opportunity costs for investors. To address this challenge, secondary players need to identify funds or assets that have clear exit potential, leverage their network and expertise to facilitate exits, and offer liquidity solutions that can unlock value for sellers. Despite these challenges, there are also many opportunities for secondary transactions in Asia. One of them is the growing maturity of the Asian private equity industry. As the industry matures, more funds reach the end of their life cycle or face extension requests from their managers. This creates a demand for secondary solutions that can provide liquidity and alignment for investors who want to exit their fund commitments or restructure their portfolios. According to DPA Investments data, 10 Asia-Pacific-focused secondary funds raised a total of $2.6 billion in 2022, up from $1.4 billion raised by 8 funds in 2021. Another opportunity for secondary deals in Asia is the increasing sophistication of both LPs and GPs in their approach towards secondary solutions. LPs are becoming more proactive and strategic in managing their private equity portfolios, using secondary tools such as fund sales, direct sales, co-investment sales, or preferred equity to optimize their exposure, diversification, and performance. GPs are also becoming more open and receptive to secondary solutions that can help them address issues such as fundraising challenges, portfolio rebalancing, or stakeholder alignment. A third opportunity for secondary transactions in Asia is the emergence of new segments and niches within the secondary market. These include sectors such as venture capital, infrastructure, real estate, or impact investing that have seen increased activity and interest from both sellers and buyers of private equity stakes. These segments offer attractive opportunities for secondary players who can leverage their sector expertise, network, and track record to source and execute deals that can generate attractive returns. In conclusion, the secondary market in Asia is a dynamic and evolving space that offers both challenges and opportunities for private equity investors. Jefferies Financial Group is well positioned to lead the secondary push in Asia with its experienced team led by Dennis Kwan, its global network and platform, its deep understanding of the Asian markets and regulations, and its strong track record of delivering successful outcomes for its clients.